Record contraction there in terms of factory activity, much worse than expected. You're expecting, nonetheless, a robust rebound commencing from the second quarter. That's your baseline at the moment. Would you be maybe rethinking that when you look at a number like this?
Well, I mean, I think it's directional. So, I mean, we saw over the weekend that we also had the fall in the official PMI as well. So, I mean, we were expecting a terrible number. There's no doubt about that, and particularly we're going to see some terrible numbers in some business surveys as well. Real activity is also going to be weak. So I think we're still working on that working assumption that it will be short-lived, but it's going to have a very high impact. So as I mentioned earlier, that Q1 GDP, I mean, China at only 2.3% year on year, and that really is because of that manufacturing sector, because of households, and because of tourism as well, all impacting the economy.
Indeed, we're also seeing here in terms of some of the commentary that there was a big backlog of previous orders, which I guess feeds into what Stephen was talking about. You know, are we looking at demand destruction or demand deferral? And if indeed there is this pent-up demand, there is this backlog of orders, which, you know, once things do start to get better, get unleashed into the market, what kind of robust rebound would you expect? How strong could it potentially be?
You could be looking up at a close to 10% year on year in Q2. So it is true. I mean, we do see some destruction. That's bound to happen in this situation. But there are a lot of this is actually deferral as well. So we're actually looking for a very strong rebound in growth going from Q2 into the second half of the year as well.
Stephen, would you agree?
Yeah, one of the things I just really wanted to ask Sian is policy responses. So we've obviously already seen the PBOC being accommodative. They've given much greater flexibility to the banking system in terms of the way that they deal with bad loans and how they define those. We've obviously seen policy responses from other central banks. Could it be a case that the worse the data, the more accommodative the policy response is going to be, and therefore the more supportive?
I think definitely in China, that's the case. I mean, we've seen China being more sort of reacting to data, and they're willing to show support, but they don't want to actually have a big bazooka of fiscal or monetary policy. So I think we'll obviously see more things come into place in China. For the rest of the region, we don't see too many more interest rate cuts. We already think things are fairly accommodative. They're probably willing to cut rates more if it looks like it's going to be more prolonged, go into Q2. But we're also seeing the fiscal side now. We've seen for Singapore, we've also seen that for Malaysia last week as well, and Hong Kong, of course. And we're expecting more fiscal support from Thailand and Korea as well.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.